Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. By the end of Tuesday, the euro gained 45 pips. And during today's specific session, it has added roughly the same amount, approaching the target level of 1.1027. If resistance is broken, the price may target the 1.1110 and 1150 target. However, a bearish trap could be lurking there. The reason is that commodities and stock indices continue to decline sharply, and the euro might not withstand the pressure. Yesterday, oil fell by 2.16% and the S&P 500 by 1.57%. A consolidation above 1110-1150 range, combined with a correctional rebound in equity markets and oil, could extend the euro's rise toward the 1.1276 target. An alternative scenario with a drop in the euro toward 1.0762 may also unfold, but for that, the pair needs to consolidate below 1.0955. On the 4-hour chart, the Marlin oscillator has timely entered positive territory, indicating the price needs support to break through the 1.1027. Once the price has consolidated above these levels, it could cautiously advance to the target zone, 1.1110-1150 range. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. The average volatility of the GBPUSD pair of the last 5 trading days is 185 pips, which is classified as high. On Wednesday, April 9, we expect movement within the range of 1.2579 to 1.2949. The long-term regression channel is directed upward, but a downward trend persists on the daily timeframe. The CCI technical indicator has entered the overbought zone, indicating the beginning of a downward correction. The correction has already started abruptly. The GBPUSD pair has sharply entered a decline, which could develop into a prolonged correction or even a trend we've been anticipating for the past few months. We still don't consider long positions valid, as we believe the entire upward movement was a correction on the daily timeframe that has now become irrational. However, if you trade purely on technical signals, long positions remain viable with targets at 1.3084 and 1.3184. If the price consolidates above the moving average line, it's a sign line on a graphic. The pound may resume growth if Trump increases tariffs and other countries impose retaliatory tariffs. Sell orders remain attractive with targets at 1.2207 and 1.2146, as the upward correction on daily timeframe will eventually end. Even if we are now witnessing the beginning of a new uptrend, a solid downward correction is needed, as the pound has risen too much in recent weeks. That's all for today. Wish you best of luck.